Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we saw a not so great day and an especially not so great close, Justin.
Yeah, it's getting pretty ugly out there, but we'll go ahead and take a look at some of the stocks and see what we can learn from them. Not necessarily buy right now. So we'll take a look at BJ's Wholesale and also Wolfspeed and Enphase.
That's exactly right. It's time for learning and for those watch lists. So we'll get to a couple of stocks here soon. But first, for the major indexes, the NASDAQ down 0.6% by the close, but a harder hit were the S&P 500 and Dow. The S&P down by 1% by the close of today's session. The Dow down 1.1%, so some bleeding, especially into the last little bit of trade here, Justin, worsening. So the NASDAQ reversing lower here today. This chart slightly delayed, so it doesn't quite reflect how we finished here, but it's not looking good at this juncture.
Yeah, I think that's kind of what you can leave it at. It's just not looking good. And whereas on last week we had the Dow Jones Industrial Average clearing those June lows, undercutting those, we've got kind of the S&P 500 now. Almost joining it. It's just holding slightly above. The Nasdaq's getting close as well. It wouldn't be a big surprise if we took out those June lows. But yeah, we are seeing a lot of weakness out there, and the next question is how low can we go, right?
Are we playing limbo now, Justin?
Yes,
Or,
exactly. Yeah. Well, at this point, it may be funner to play limbo than to be trying to invest in this market.
Yeah, bending that.
Yes,
bending over backwards here, trying to find stocks for our watch lists.
That's exactly it. And it's one of those things where, and we'll talk about this in a little bit, but you had a lot of these leading stocks that were holding up and they were looking okay, and then last week, this is what seems to happen. You just get the rug pulled out from under you, whether it's the oil stocks that were looking so strong earlier this year, or recent leaders. It's just there's kind of no safe haven right now anywhere.
Yeah, exactly. All right. Well, we'll continue to keep an eye on those June lows, especially for the S&P 500 and NASDAQ, as we've been discussing the heightened probability, Justin, of a more significant third leg down if we do see that undercut. What do you think?
Well, I don't think we necessarily need to undercut in a big way. I mean, just look at that chart. We've already got the third leg, right? I mean, if we undercut, it doesn't have to go down a huge amount. So that's the thing is, don't be so bearish that you're not able to see the silver lining here, in that when we do recover from this, there will be opportunities. So what we need to do is we need to just build those watch lists, look for those things that are setting up, because look, there's a number of areas we could get support here. We've got, in this case for the S&P 500, those September highs. I think that's kind of a next stop if we get to that level. That's right around the June lows, so we're almost there. Next beyond that would be kind of the pre-COVID highs. So those are two levels that again would make sense for us to come down to, but we don't have to come down that far to hit them at this point.
Right, exactly.
A lot of the damage has already been done.
It has. But with that being said, say we do start bouncing from here, that doesn't mean that it's going to automatically be off to the races and sunshine and rainbows. We have a lot of hurdles on the upside to clear. First and foremost, that 10-week line, the red line on the chart, but you have a lot of other levels that we could get some resistance at.
You're absolutely right. And so I think it's a big warning that, one strong day does not an uptrend make, right? You're going to want to wait for that follow through day where you see a rally start and then have some type of confirmation at least 4 days later where you get a day of strength with heavier volume. But right now what we're seeing is a lot of volatility out there, and that can make for a tougher investing progress, because what happens is it kind of sucks you in. Sometimes things are looking like they're bouncing, but then again, if they don't work, even if you end up taking small losses, those small losses can add up, and before long you've made a dent in your portfolio.
Mm-hmm. Yeah, that's exactly right. Well, an interesting update on the currency front today, Justin. We've been talking about the strong dollar, which we are continuing to see strengthen in a big way here. The news today hitting the British pound as the dollar and the 10-year yield continue to really spike here. Look at 0TNX on MarketSmith, which tracks the 10-year yield up almost 5% today. And it seems like we would have seen a pullback by now, but there's seems to be like no stopping the surging yields here, Justin.
Yeah, it's really incredible, and certainly that British pound pummeling that happened today. I mean, it's at its lowest, since versus the dollar, since I don't know how far back. I mean, I couldn't find it any lower. So that's pretty. It's when we're talking about the dollar and when we're talking about yields as the
Yeah.
main focus. I mean, that just kind of tells you how bad it is out there for stocks. And of course, as these get, as the dollar gets higher, that's something that does affect your multinational corporations, right?
Right.
They're
The,
gonna
yeah,
they're gonna be
currency
struggling with
translation.
those. Yes, they're gonna be struggling with those forex conversions and saying, hey, you know what, we're making less money because when we convert it into dollars, from overseas, there's less revenue there. That's not
Yeah.
too big a deal as long as they're still making progress. But those yields, hey, that's discounting our future growth, and stocks have to adjust to that. That's an important part of the valuation
Mm-hmm.
equation, and so when that's happening, adjustments have to be made. And again, right now, it's just not slowing down. Now, it can't go to this level. I mean, look, I just watched Top Gun Maverick, and what I learned is Maverick can only go vertical for so long, right?
Right.
Same thing with the yields
Can't go
here. It can only,
vertical forever.
yeah. But that being said, I'm not going to want to step in front of this freight
You're
train.
not gonna play chicken with
Yeah,
the yields.
trying to see who blinks first. So,
Yeah.
for me, I'm just, step into the sidelines. We'll see how they end up. But if you do see a reversal, then that could see a bounce. But remember, just a day or two. Even if we get a follow through day, there's been a lot of destruction here, and that might take some time to heal.
Mm-hmm. And it does seem like it would be difficult for the market to rally if we continue to see yields rise because guess what coincided with the June lows? A temporary peak in those
Hmm.
yields and the yields coming off for the following couple of weeks. So we'll have to see how that trend continues to play out here, Justin. We also want to check in on the VIX. How's volatility doing? We are starting to see it come up a bit, not spiking to the levels that we saw at those June lows, but we're getting up there.
Yeah, I think the biggest thing is that, a lot of people were afraid of too much complacency with the VIX being so low that they're, a lot of times what the big institutions will do, the big money, hey, they're going to be buying, some options, or, they'll be buying options on the VIX in order to kind of give themselves a lot of protection, downside protection. I think at this point, a lot of people have maybe gotten gotten the sense that the correction is here, and they've planned accordingly. But if you do see these spikes in the VIX, that's something to be keeping in mind, because a lot of times those spikes can coincide with bottoms. But this is a secondary indicator, so
It's not
just keep
an
this in mind.
exact timing mechanism.
Exactly. It's
Yeah.
it's it's kind of, it's useful, but when it comes down to it, our decisions are going to be made on the price and volume of the indexes themselves,
Mm-hmm.
and the health of the stocks that are driving those indexes.
Yes, yes. Couldn't have said it better myself. Justin, we also want to take a look at how oil and natural gas are doing because you talked about the recent weakness there in the energy sector. And look at oil today, down another 3.3%. Looking at the weekly chart here, you can see a pretty clear deterioration. Also, we want to take a look at UNG, proxy for natural gas here, which we've seen quite a few red weeks in a row, maybe a little glimmer of a bounce, but it's definitely not in an uptrend.
Yeah, right. And look, natural gas has been a little bit stronger than oil lately. So again, when you're playing any energy names, you need to be aware of, hey, where are you putting your money? Where is your exposure? Is it in gas? Is it in the oils? So natural gas certainly looks better, but I think the point here is that, look, this was the where the leadership was, and even just a few weeks ago, this is what we were talking about, right? The oil and gas names were setting up. They were looking like they were setting up,
Yeah.
but now a lot of those have gotten destroyed. And for the leading group of this year, I mean, we were looking at 80% gains, 50% plus in a lot of the oil and gas groups. They've come down quite a bit off their highs, and so this is one of those cases where I think you got to take those profits when you have them.
Yes. Yes. Just because a group is leading doesn't mean it's going to continue to lead. So we got to be looking at those sell signals accordingly to preserve profits. Let's take a look at a standout in the retail sector, and that is BJ's Wholesale, ticker BJ, up 3.2% on a down day and finding support where you'd like to see it, Justin.
Exactly. I mean, this is something that's attractive to me. You got both the 50-day moving average line that provided support, and I mean, if you look at the top of that base, it came down kind of right to there and found support. Now, if this had gone up a lot and given up all the gains, completely round tripped, that would have been kind of a negative signal. But right now, this is acting very orderly, and look at that relative strength line, just really soaring. Because I mean, look, when you compare it to a lot of the stocks that are out there, this is something that's holding up very well comparatively.
Yes, it is. But just because it's holding up well, does that mean we should have it in our portfolios,
Not
Justin?
not necessarily, because again, this is kind of a recurring theme, right? This is why it's important to have these as watch list names. We've been talking about a lot of these stocks that have been holding up well, but I mean, just look at what happened last week. We kind of changed our tune on a lot of them, and it's like, okay, well, now they're not holding up quite
Mm-hmm.
so well. So again, look, if you have to be buying something, I'd rather be buying a BJ's right now than something in technology. But for a lot of us, we don't have to buy something. We're not an
Mm-hmm.
institution with a mandate from up above saying that we can not hold a large cash position. So if
Right.
you do have that flexibility, the other part here too is, look, when you have these stocks setting up in a market that is poor, the upside potential is usually less.
Right.
You're going to have that market kind of acting as a big headwind for you, and so why try and fight that?
Yeah.
It's much better a lot of times to just wait for those winds to turn to your favor and
Mm-hmm.
help push you along rather than
Yeah.
something you fight against.
Yeah. Even though BJ is holding up, it dropped almost 7% last week.
Yeah.
So it's the stocks with relative strength lines at highs that doesn't mean that they are absolute winners. That's something that I love that Ed says. Just because
Yes.
you're a relative winner, that can mean you are an absolute loser. But
Hmm.
it was up today, so we'll keep it on our watch list. Let's
Hmm.
also take a look at Wolfspeed had a big outside week last week, downside reversal off by over 8%, trying to go tight here now. It's been holding above the 10-week line as well, right around the 21-day, trying to get back above it. But, all in all, still pretty tight action in this recent consolidation, around 123, 124 down to 105. So it's relatively orderly. Would you say still here, Justin, enough for it to be on our watch list?
I think enough to be on your watch list, but you have to look at days like what we had on Thursday and really pay attention to that. That was a lot of volume behind that day. And so for me, like when I saw this jumping this morning, I said no, thank you. Again,
Yeah.
I like the reversal that happened on Friday. Nice close, but you've got some damage that was done, and so until we can kind of really see some progress made into that day. I mean, we're still at the low end of the range of that Thursday. So, and
Right.
and again, it's you just cannot ignore when there's very heavy volume like that. So, this is one of those cases where I feel like that's a little bit more of a serious injury to the stock,
Mm-hmm.
and it may require some time. I still like the stock overall. I still like the company overall, and that's fine. But it's not going to get my money until I feel a little bit safer with what's going on in the market, and also with this stock in particular, with that stock price recovering.
Mm-hmm. All right. Well, it is standing out in the semiconductor
Yeah.
sector, so worthy of our watch list from that perspective. But great analysis there of the price and volume action, Justin. And last but not least, let's take a look at Enphase. Talk about a leader suffering some damage. This is one of them. Maybe persuaded some investors at the beginning of the session to take a nibble, but this is also exactly why it's best to just stay away right now. We did see a downside reversal after a potential bounce at the 50-day line for this stock that has been such a leader lately, but still in the damaged category, it seems like for now, Justin.
Yeah, I mean, we saw this on IBD Live this morning. We're on our live show, and you're noticing a lot of people in the chat asking about Enphase. Can we nibble here? Is it time? Is it back? Because look, you look at where it's getting support, and that seems like a reasonable level. But every time I think you pose the question to the panelists, we were all kind of like, we were just not feeling
Right.
very frisky in terms of getting getting involved with the market. And so yeah, I mean, we didn't know that a reversal was coming, but it's also not surprising, when you see kind of a little bit of strength start a Monday morning. It's not unusual for that to fade when you're in a weak market. That's
Right.
very bearish behavior, and that's what we've been seeing a lot more of, is this
Yes.
bearish behavior.
Yes, and Justin, something else that I love that you mentioned on IB Live this morning is, it's tough trying to use bull market
Yeah.
strategies in a bear market. If we were in 2020 and we saw that first touch of the 50-day line and bounce after a strong move on earnings for a leading RS stock, hey, it makes sense to add some shares there or maybe even initiate a position. But we are not in 2020, that strong bull market. We are still in a bear market here.
Yes, exactly. So you have to use different rules. And, for a lot of us, that's meant taking profits quicker. And while, again, I like the fact that Enphase is holding here, it really is getting support where you'd like to see it. And even though it's lost its 50-day moving average line, it hasn't lost it by much. But, it's also, again, you've got this big overhang of the market indexes. You've got a lot of weakness out there. And what we just keep on seeing is these leaders just getting cut and cut. So rather than kind of participate in that downside or the volatility back and forth, it just might make sense to keep this on your watch list and wait for better
Mm-hmm.
days ahead.
Yeah, and I guess on the positives, what I like is that it is not. It's below the 50-day line, right? But it is holding support at the low. It looks like there is,
Yes.
some buying coming in just above the 270, 271 level. So maybe tomorrow could be a key day. Is it going to continue to find support at that level, or will it continue to maybe test this gap here from late July?
Right. And I mean, let's take that step back to the weekly chart. This is why it's kind of important to look at both. You see how much of a strong gain it had, very quickly in that July period. Of course, a lot of this was due to policy, the Inflation Reduction Act coming out, and the kind of promise of money getting poured into this area. So, and look, I had a position in this myself, and it was great. It was up over 50%. Again, it was sunshine and rainbows, but I'm not going to
Literally
try and
sunshine
right,
for
literally
this
sunshine.
polar stock.
So, but I'm not going to try and hold on to these, for big gains. I'm not trying to swing for the fences. I felt like I got a gift, and I
Yeah.
needed to take it while I had it. So. To the point that you brought up earlier, I'm not going to be using bull market rules while we're in a bear market. So while I do really like the fact that it's holding those gains so well, it just might have a little bit of time that it needs to put in
Yeah.
to actually form a base, or get that strong bounce from that 10-week moving average line, with hopefully the
Right.
market behind your back, giving you
Mm-hmm.
some extra oomph.
Yeah. Who knows? Maybe a couple of more weeks around this area. We could see maybe a declining tops trend line coinciding with a move back above the 50-day, 10-week line and the market in our favor. huge key there that we need, that magic ingredient.
Yes, but undeniably, this has the strong relative strength. This is one that has fundamentals. And while we're seeing a lot of these earnings estimates coming down, getting revised lower and lower, you see that Enphase, you've got that green little triangle that's pointing up. That means that the revisions for the estimates are going up. And these are some, strong numbers here, triple digit on earnings growth the last quarter and double digit on the revenue growth. But that also just kind of makes that reminder earnings season is coming, and that's something that we're going to have to deal with. I feel like this last time around, a lot of the companies kind of guided weak and tried to beat those weak estimates. We'll see how this earnings season comes out.
All right. Well, thank you, Justin, for breaking all of that down for us and for everyone for tuning in. And we will see you right back here tomorrow. But before that, we've got IBD Live, and we hope you join us for our daily morning live stream where we are breaking down the action in real time and answering your questions along the way. Go to investors.com/IBD Live for all the details. We'll see you there, and we'll see you right back here tomorrow. Thanks, everyone.